Repo rate is a crucial monetary policy tool in India set by the RBI. Essentially, it is the interest rate at which the RBI lends money to commercial banks in the country. Banks in turn use these funds to meet their short term liquidity needs, often against the collateral of government securities. The term repo stands for repurchase agreement, signifying that banks agree to repurchase these securities from the RBI at a predetermined price on a future date. The RBI uses the repo rate to control the money supply and manage inflation in the economy. When the repo rate is lowered, it becomes cheaper for commercial banks to borrow money from the RBI. This reduction in the cost of funds for banks usually leads them to lower their own lending rates for consumers and businesses. Cheaper loans encourage borrowing and spending, stimulating economic activity and boosting demand. Conversely, when the RBI increases the repo rate, borrowing becomes more expensive for banks, which then typically pass on this increased cost to their customers through higher interest rates on loans. This discourages borrowing and spending, helping to curb inflation by reducing the money supply in the system. The repo rate has a significant impact on the share market. A lower repo rate generally has a positive effect on the stock market. This is because reduced borrowing costs for companies can lead to higher profitability as their interest expenses decreases. Companies might also find it more attractive to borrow for expansion, capital expenditure, and new projects, which can lead to increased earnings and consequently higher stock prices. Furthermore, lower interest rates on traditional fixed income investments like fixed deposits make them less attractive to investors seeking higher returns. This often prompts investors to shift their funds from debt instruments to equities, increasing liquidity and demand in stock market. Sectors that are highly sensitive to interest rates, such as banking, real estate, and automobiles, tend to benefit significantly from a repo rate cut.